Hello friends, thanks for joining me again. In front of you can see a quote from Richard D. Wyckoff from his book Studies in Tape Reading. I'll just briefly read a little of it. The market is a tug of war. The successful tape reading means chart reading, requires ability to judge which side has the greatest pulling power. When Wyckoff says which side, he means between buyers and sellers. Which side of the buyers and sellers has the greatest pulling power? And one must have the courage to go with that side. There are critical points which occur in each swing, just as in the life of a business or of an individual. At these junctures, it seems as though a feather's weight on either side would determine the immediate trend. Anyone who can spot these points has everything to win and little to lose. This is a really important quote, one that people should remember. It's basically saying that when you're reading a chart, it's a tug of war between the buyers and the sellers. And at certain times, you can see which side more than likely has the advantage. And when that happens, one must have the courage to go with that side. Which means put your money down and bet on your judgment. This is really important advice and one you should follow. Now in front of us is a chart. It's a weekly chart of Sonic Healthcare on the Australian Stock Exchange. You can see down here was where the market fell down during the coronavirus problems. And then it was realised that this company, it's a medical technology company, would be providing a lot of testing around the world for the coronavirus. And in response, the market bid price up. At a certain point, the market felt that the stock was fully valued and perhaps even a little overextended. You can see here, this looks like a serious upthrust, but volume wasn't particularly high. The volume is this one. So there might have been a little over-enthusiasm in the market and price might have been bid a little high, and then it needed to move into consolidation. You can see that some suppliers come in here. This was some selling pressure. But then buying was here. So the market had reached an equilibrium. There's now a tug of war between both sides. The buyers here and the sellers here. And there's no knowing which side is going to win. So all you can do is follow and see if at some point a certain juncture arrives where the probabilities begin to mount up in your favour that you can predict direction. So we'll go ahead one bar. Does anyone feel they know what might be going on in this market? You can see here the bar before that price had dropped just below where support was previously. The market had dropped below before, modestly. Is the market selling off? You've got a down bar, so prices continued lower, spreads narrowed considerably, volume is slightly higher, and the close was just off the lows, almost at mid-bar. I'll suggest that this market was seeing significant buying come in. If the volume was increased, you would have expected spread to be much wider. If it was this wide previously, you'd think that it would continue much wider or wider than the previous bar, because the volume was increased and it was all selling pressure. But it wasn't all selling pressure. The reason that the spread was reduced and narrowed was because buying came in. The market was buying the stock. We'll see what happens on the next bar. Buying came in. This was selling, there's no doubt. Now you can see that price initially has dipped below the previous bar's low, closed about level. I'll suggest that from this close, price initially went up, then it went down, and then closed in the middle or just above the middle. That would be my guess. Remember, it's a weekly chart. You can go back and check the daily movements if you want. But I'll suggest that's what happened, and volume this time was much lower. It was average, but it was much lower than the previous two bars. So selling pressure appears low. Now, if you really believe that buying came in here, and Wyckoff said you should have the courage to back your judgment, you need to come up with a plan for buying it. You don't want to just buy it and leave yourself vulnerable. You're still below previous support. You don't really know what's going on. You think you know what's going on. So you need some sort of plan. In this case, my plan would be to buy the stock when it exceeded the buying bar's high. So if and when price pushes above where I believe I saw the buying, and strong buying by the looks, as price moves above that level, I want to buy it and see where it takes me. And then as time goes on, I can move my stop, if I'm using a stop, to protect my gains, at least to some extent. We'll go ahead a bar, and you can see that just that has happened. Here is approximately previous support. Here was the bar we identified as more than likely strong support or buying in the market. This was a test for supply, and supply was seen to be lower. I decided I would buy as price moved above the high of the buying bar. Price did so on this bar, or during this week. So I would be in the market now. I am in the market now. And that was 2 weeks ago. And the response this week, that was a nice response. You can see that in response to what was more than likely buying that came into the market and some form of test for supply. Now, if you were wanting to carry a little extra risk, you could have bought on this bar. You could have identified the buying in this bar and said, I'm going to get into the market, and bought in this bar, bought down here. I prefer to buy on the breakout of some sort. So I wanted to buy the market when price moved above the high of the buying bar. So I bought as price moved above this level. Would have been even a better buy if you could have seen price come back, test this level, and then accelerate away. But price was impatient. And you may have seen something like that very briefly on a intraday chart. But however, price accelerated higher this week with a wide spread and an increase in volume. just how you would like to see it, and price has gone above the previous high. It's got this high here to challenge next. I won't be surprised to see price come back and then accelerate away, but if momentum is really strong, it may just accelerate away. We'll just have to wait and see. The moral of this story is, however, the market is a tug of war between the buyers and the sellers, and at some points or at some junctures you can see a higher probability of a principle in the market, and this was a buying principle here. More than likely buyers came in strongly here, and when this happens you need to have the courage to back your judgment and go into the market. You don't want to go into the market all the time for no particular reason, but when you see a good reason to enter the market, you should do so and have the courage to do so. And if you got it right, you'll see price accelerate in your favour. And if you got it wrong and price reverses quickly, then you need to get out for the smallest loss possible if you're trading. So you would have your stop just below this level or this level. Give yourself a relatively tight stop. You can re-enter the market again after a small loss if necessary, but generally a good trade will begin to work almost straight away. In this case, price accelerated higher, moved above the previous highs, and is looking quite comfortable at the moment. Okay, just a short one this week. Thank you very much. See ya.